So this is the market summary for Thursday, the 2nd of February. Our last video, we did state that we probably wouldn't take any trades because of missing the earlier move as indicated by this red arrow. Earlier, the market open, we're looking at this these two blue lines, which indicate the opening 60-minute range here on ES. As we can see, we've pulled back, held the lower range, pulled through to the upside. These blue circles here indicate the high of yesterday. So we pulled through, tested the opening range, 60-minute highs. Just over here, we've had the bounce to the upside. We've had a good strong bullish close above the previous day's highs. Not much wick. What happened, I'm just going to briefly summarize it if you haven't watched the earlier video. What happened is I've placed an order in around that 68.50. Looking at that 68.50 67 zone for prices to pull back and trigger me in for me to go long. As we can see, we only had one tick of pullback before we had this strong move to the upside, so fairly early on I thought it would be the same as yesterday, not providing me many opportunities to get long in the market. So that pretty much where we were when I concluded the previous video. Now I continue to watch the market, looking for a pullback opportunity to go long, and we did have that here. This time I didn't use my usual amount of points. Instead of shortened it a little bit, just to ensure that I was getting in on a limit order, but it wasn't as far away as previous trades, especially from yesterday and earlier today. And we were triggered in at 88.25 for a long, and the goal was about 50% of the way to the target. I mentioned we're looking at that this week. 50% of the way to the target, we're looking to take profit. Then what we would do after taking profit is place a limit order lower down, so we anticipate taking profit, market pulling back, triggering us in long again for a move up towards our final profit target. So rather than simply hold all the way to the final target, we'll take profit, wait for a pullback, and get in. In so doing, the winning trades in theory should be bigger than our losing trades, because we've made two entries. Even though we are paying more in commission, we're getting a better price, several points below where we would have taken profit, and if the trade obviously works out, we'll hit our final target. So here went in at 88, we went long at 88.25, 50% of the way to the target we're looking at that 204 was in around at 197. Now initially I had my buy order around 93 or so, just looking for prices to come back in towards these highs just here. But after prices broke out of the highs, as we can see here to the left, we can see the wicks showing selling. After prices broke out, we came back down, something I anticipated us doing. That's the reason why I took the profits where I did as well, because we're breaking the previous highs. I could imagine there might have been some sell orders there to sell the market back down, but I saw the market come back down really quickly. So I dragged my order down from around at 93 down to 92 by a point. As you can see, market triggered me in, so taking profit at 97, bought back in at 92, held a position, and eventually my profit target was filled here at 4204.25. The market did go higher, as you can see, went as high as 208.50 before we saw very strong selling. I wasn't in the market at this time. I was pretty much happy with the two, well, it's one trade with two different entry criteria, so of course I suppose we could say it's two trades here with the re-entry. So I wasn't looking at the market at this time. I did have a couple of alerts go off in terms of a strong bearish volume coming into the market, but what I wasn't going to do is what I wasn't going to do is take that trade short that I did yesterday, and the reason being, yesterday I did not state that it was in the trading plan, and I did take it. So in yesterday's video I mentioned that it was poor discipline. So again, I was going to do that today, so decided to just stay out of the market. As you can see, it's around just after lunch, US time or Eastern time. We've had the market sell off all the way back down to the area we have previously identified, which is these blue circles, which are yesterday's highs. So we've had the market sell back down to yesterday's highs. While we traded through it, I don't think we didn't appear to close below it. Traded through it a bit, had bullish momentum come back into the market. I actually had a long signal just there. Had a long signal on this candle right here. Now I hesitated. I didn't really want to take the candle as we were pretty close towards the end of day at around 9 p.m. my time. I didn't want to take it, but initially the candle did not pull back at all. It was heading to the upside, and I thought, well, it's probably a good decision not to enter the market, and already making about 21 points for the day. I didn't want to overstay my welcome, especially at the end of the day, so I decided not to take it. As you can see, the market pulled back, so a limit order out of place would have likely been filled. This is all in hindsight. It looks great in hindsight, so I'm going to be very careful here not to read too much into it, because this could result in biases coming into my trading either tomorrow or into the future, which would mean I'm anticipating opportunities throughout the day, even at the end of the day, and I may take bad, poor trades, and those work counter to my goals. So even though the trade did work out, there was some risk, because the market has been up, especially ever since FOMC, quite a bit. So it wouldn't be too surprising if I'd have entered long. Then the market turned around, tested and broke the previous day's highs, which we have tested a couple of times now, and sell off, and then I'd be in a position I wouldn't really want to be. So we've seen the market head to the upside, and if I did take a trade, the target would have been hit on this candle here. This candle is 9 p.m., which would have been at 4 Eastern time, and I would be out of the market by that time as per my rules. This strong bearish candle here is pretty much, I think there's quite a bit of earnings. Amazon, I think it's Amazon, and we have quite a few stocks, important Nasdaq stocks anyway, that are coming out. So I think that's what this candle is. Initial move to the upside, coming near the highs. Well, broke slightly above the opens here. It didn't quite break the highs of the day before being slammed back down. And with that said, I suppose we should show our account. Let's have a look at our account. So on the account history, we are going to show. So this was the counter trend trade. That was a counter trend trade from yesterday that we did take for just over 6 points. There's our first trade, and I believe it is 8.75 points on that trade. And the second trade, where we've made 12. Was it 12? Yes, 12.25 points here on ES. So we've seen the account head back to the upside here. I believe we are at the actual highest point we've been since we've started this trading challenge. Don't think. Let's see if we have been higher. These were the previous highs before we took that very big loss there of I think it's 41 points or so. Yeah, just over 41 points. So our previous highs were in around 23.66. Yeah, those are previous highs, 23.66. Currently we are at 24.18. So we're at highs for the account for the 50k trading challenge here. Might as well just go all the way to as far as TradingView will allow me to, just for transparency. Show the account hasn't been the account hasn't been reset or anything. I think, is that it? I think we go all the way back to the 4th. Yeah, it's the 4th of January, and this should be the there we are, the 4th of Jan. So head back to the upside to the current day. There we are. So there we are, our 2 trades today. Performed as expected, and with that said, thanks for watching.